Hello everybody, this is Gaurav Gambhir and it's good to speak to you again. I'm here with my monthly report. We always talk about the Philadelphia, Montgomery and Delaware Counties. That's where I'm from, Philadelphia, sitting right here in Center City. I am super excited, super excited because Feds are finally going to be cutting rates. So I have always been of a belief system, the best time to buy is when you're ready for it. However, I understand the consumer confidence, the borrowing power, they all matter because people have to come up with the money, the down payment, and they feel that the monthly bill is something that they may or may not be able to afford. I beg to disagree a little bit because I think it's extremely important for them to remember it's not a 30-year fixed that you'll have to pay. You can always go down. So always remember this theory. The maximum you'll pay for borrowing money today is already locked. You'll never go above it. You can only go down if the rates gets better by refinancing. So that's an interesting thing that I always thought when I bought my property was 6.5%, and then I just kept reducing it as I bought the time came by and was time for me to refinance. But anyways, one thing to remember also is that the Fed is tasked to make sure that the maximum employment happens and the inflation rate stays the lowest, right? So, we know the inflation has been high, but as the unemployment numbers are coming in, if the employment is not as high, that means people may unfortunately be losing their jobs a little bit. So then the Feds are going to reduce the interest rate, so the buying power for the consumer and for the businesses goes higher. They start hiring more people. And then that pushes the economy back up again. So that's the idea behind, why interest rates really matter so much. And this is the consumer confidence. Always ask yourself, key question, always ask yourself, what interest rate am I waiting for that if that became that interest rate, I'm going to end up buying? So what interest rate are you waiting for? Is it the prices or the interest rate? So people say, well, I'm waiting for the interest rate to go down because with lower interest rates, the price is going to go down. No way. Interest rates goes down, affordability and buying power goes up. Obviously, people are going to try to push the prices up. Why would they reduce it less? If you were the seller, why would you reduce it? Because now people can afford to pay more. Always remember, during COVID, why was everybody paying, or right after COVID, why was everybody paying much more higher prices and there was a bidding war? Because the rates were under 2.5% to 3%. It was such high buying power, and that's what we built it. So looking at some of the comps or some of the listings, the neighborhoods that have had some stabilization are continuing to do well. Some of the suburban homes or suburban markets are doing well. Some of the other ones are not. So it always depends on the market, the neighborhood, even sometimes the street. So you have to look at every house and the supply in the market to be careful, and that's why you really need an expert to guide you to do that. ChatGPT is not going to be able to do that much. Looking into the house and the neighborhood, and also the understanding of what the seller and the buyers are willing to do. So look at some of the homes. We're keeping it tight in the 200 to less than 300,000 range. We always try to present to you that saying there's so much supply out there. There's you can rent a home for between 1,600 to 2,000, but then you can also buy one at the same price. So my recommendation is use us or use somebody else, or use an expert, or you don't. All up to you, but go buy. Buying is what's going to help you build wealth, and that is a message that I've always been trying to tell everybody. I'm a student of that same message. I've done it myself. I've always helped all my friends and my other cousins and family do the same thing. That is how you're going to build wealth, and you're not going to make any mistakes in the long run if you stayed in the market for longer. But if you stayed too long to get in the market or to buy a home, that's when you struggle. So all the best to you. Hopefully you do take advantage of the interest rates that are coming up and not wait too long. But my bet is prices are going to change and reflect. Talk to you soon.